Ethereum is built on one central foundation, and that's decentralized finance. The issue is that decentralized finance is cracking as a foundation. And that's because artificial intelligence makes it much easier to hack various DeFi protocols. Have a look at how many million got hacked and removed illegitimately from decentralized finance protocols over time. We have seen a massive jump last month. And that then begs the question, what kind of knock-on effect will this have on the altcoin market? Because what we see over here, that's how much correlation there really is. In blue, we've got the market cap of Ethereum. In white, we've got the market cap of total 3 ES. Total 3 ES is the market cap of all of crypto, excluding Bitcoin and Ethereum, and also excluding the stablecoins. The two go hand in hand. They tend to move in the same direction at the same time. And so if Ethereum was to suffer, it very likely will drag the altcoin market with it. And so that's not just in aggregate, that's for most individual assets as well. Just have a look here at the altcoin market in the last year. There are very few outliers that actually made money last year. When the market in general is going down, it's going down almost without exception. There is Zcash as an outlier, there is Dash, there is the Just token on the Tron chain, and there is the Banana token, a token that's native to a trading bot. Hi, my name is Gerhard. I've been in crypto for the last 8 years. I started this channel 5 years ago and I hit my first million 3 years ago. And I like to use this YouTube channel to share the data points that I personally look at in order to outperform the market. My trading performance is publicly viewable here on this page. It's, by the way, linked in the pinned comment down below. Not every month I outperform. This here is my relative performance to Bitcoin month over the last 6 years. But what counts is the long term. And I don't think you will see that kind of data for many other crypto channels here on YouTube. By the way, if you're interested in copy trading, more details are on this page as well. Now, Ethereum and the altcoin market tends to move in the same direction at the same time, but it's not perfect correlation. Sometimes the altcoin market is weaker, sometimes Ethereum is weaker. So the ratio of the two is a very interesting chart as well. That's this chart here. Ethereum's market cap divided by total 3 ES. When Ethereum is expensive, it tends to be slightly larger than the entire altcoin market. When it's cheap, it tends to be only a third of the altcoin market. On average, since 2017, the ratio was 0.61. So that's the dotted line over here. We are slightly below that equilibrium, but I find this chart fascinating because it gives us a quite clear anchor point when we should rather be in Ethereum versus the altcoins. Currently, we are not at any extreme point here. And so it's interesting. We've got all of those hacks, but at the same time, we've got JP Morgan launching a tokenized money market fund on Ethereum. Tom Lee is also talking about buying more Ethereum. He started his purchase spree over here in April of last year. That helped Ethereum outperform versus Bitcoin by roughly 130%. But since August of last year, there's no more outperformance. This arrow, by the way, is when Ethereum moved from proof of work to proof of stake. But more on that in a second. Let's get back to the treasury companies. This is how much Ethereum is held by the various treasury companies. And we can see how the purchases started to slow down in September, October of last year. However, the Bitcoin purchases by Michael Saylor's strategy are not slowing down. He's buying as aggressively as he ever did. And that's why I believe Ethereum is long-term underperforming and continues to likely underperform. We can also see how for Ethereum, the long-term holders finally start buying again. They tended to sell after a rally and then that rally stopped. They then bought at the bottom here in August 2024. Then they sold again at the top. They are relatively good at timing the market and they are now buying very aggressively. Similarly to May of last year and then subsequently Bitcoin went from 100K up to 120K. Ethereum's tokenomics aren't necessarily that great anymore. This here is the inflation rate. How quickly is the supply of Ethereum growing over time? And that's currently close to 0.8%. And that's the exact same that Bitcoin has. So there's really no reason to get into Ethereum for the tokenomics. We might make the argument that Bitcoin's tokenomics are even better because here we will get another halving in 2 years, meaning the additional supply that gets issued year over year will drop to 0.4%. It's actually quite fascinating looking at the data, because once we moved from proof of work to proof of stake, the tokenomics for Ethereum looked actually quite attractive, but the price of Ethereum underperformed. So this was a sell the news event. But the tokenomics were very favorable at the time, as in the circulating supply of Ethereum was going down. That's because Ethereum was used a lot. So with that usage came token burn, and that token burn reduces the supply quicker than the staking rewards. Now Ethereum is getting used much less, thus the supply expansion is very comparable to Bitcoins. So there seems to be an invisible ceiling of how far Ethereum can grow. When we look at the decentralized finance locked capital measured in Ethereum or measured in US dollars, we seem to not get above a certain threshold. This here is the TVL, or the total value locked, on the Ethereum chain measured in US dollars. And the invisible ceiling is close to 100 billion. Here we've got the same measured in millions of ETH, and here the invisible ceiling is close to 30 million. At the bottom of the bear market in 2023, after Terra Luna collapsed and FTX collapsed and 3 Arrows Capital, etc., we went all the way to 12 million ETH. But I don't see many people talking about the recent drop in the last few months. Fundamentally, the problem is that more and more the Ethereum price gets artificially propped up with perpetual futures, with levered bets on the price. Have a look at this long-term chart here. It starts in March of 2020. What we see in green, that's the open interest. So how many bets are currently being made on the Ethereum price? What we see in yellow, that's the Ethereum price itself. We can see how open interest grows much quicker than the Ethereum price. In other words, more of the demand of Ethereum nowadays is short-term leverage. The price is actually more fragile to potential volatility risk. If Ethereum was to drop in a day, say 20 or 30%, this could generate a lot of cascaded liquidations, pushing the price down much quicker than it did in 2021 and 2022. Now I tried to figure out, is there maybe a way to trade Ethereum properly? And I ran several backtests. For example, this backtest over here. This comes from Bitcoin Strategy Analytics. That's also available to the premium members. I looked at what's the best golden versus death cross, what moving average combination works the best for Ethereum. And the answer is the 12-day versus the 33-day simple moving average. So how does that look like on a chart? We just go here to live chart, and we see that whenever the short-term moving average, so the 12-day, goes below the longer-term moving average, we should be bearish. Whenever the shorter-term moving average goes above, we should be bullish. Now we did go bullish and we entered a long position on the 8th of March. But the situation is very, very close. What's going to happen in the next days will determine Ethereum's medium-term momentum. By the way, this is how consistently that strategy outperforms just buying and holding Ethereum. The outperformance tended to be stronger in the early days. The market is getting more efficient, but it's still useful to have a trading rule that historically worked very well. And so yeah, we are currently long Ethereum, but that can change anytime. This is using the Ethereum trend following strategy. There's also a trend follower for Bitcoin. And there's the copy trading vault. This is where I short many altcoins. So that's my fundamental thesis. Most altcoins tend to underperform Bitcoin, Ethereum, and Solana most of the time because the venture capitalists and the early team and insiders, they cash out over time. And while the market wasn't necessarily that favorable in the last year, seeing that much consistency in terms of underperformance, I think is a good hint. It shows that there is maybe an opportunity here, not to try to find the one or two winners, but to just flip this chart, to bet on falling altcoin prices while at the same time betting on rising Bitcoin, Ethereum, and Solana. That's what I do with the relative valuation vault. That's how we made 44% annualized last year, and that's what we also try to achieve this year. We are currently on track to do that. I personally keep my decentralized finance exposure at a minimum. If my expected return is high enough, I'm okay to use DeFi platforms, but just for the risk-free rate on Aave, I think it's not worth it anymore. Again, because the risk of DeFi is going up, and that might potentially have a knock-on effect on the altcoin market as well. ETH is not necessarily very expensive or very cheap versus the altcoins right now. We are relatively balanced, but relative to Bitcoin, I think it's almost certain that Ethereum will continue to suffer, simply because Tom Lee isn't buying as quickly as Michael Saylor is. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.